Hello and welcome to Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. Well, we're looking at the third consecutive sell-off for European stock markets, and really the downward pressures being applied to stocks and really all sorts of asset prices around the world as a result of this commodity sell-off, which is linked to, amongst other things, the slower than anticipated growth reported out of China earlier this week. We're seeing a bit of a comeback though for gold this morning. It's up about 30 bucks an ounce to $13.87, but nonetheless that's a small beer compared to the historic decline that was witnessed yesterday and one of the steepest falls in a single day in around 30 years for the precious metal. All sorts of reasons why it's selling off so aggressively, but most of it seems to be tied to, amongst other things, the planned sell-off of around 400 million euros worth of gold by Cyprus in order to fund part of its 23 billion euro bailout. Now, we're also seeing commodity prices fall in the oil markets as well. Brent crude, probably the best benchmark for global crude prices, falling under $100 a barrel on international markets for the first time since July of last year. We're well under $90 for NYMEX light sweet crude as well, so it does suggest further downward pressure. That will be good news from an inflation perspective, but it may not filter in for a few months' time. We did have inflation data out of both the Eurozone and the United Kingdom today. No change in the price increase estimate for the month of March in either market, 1.7% in the Eurozone, 2.8% here in the United Kingdom. And in point of fact, this really doesn't give those looking for further ammunition from the respective central banks any reason to be optimistic. Certainly, Eurozone inflation is below the 2% target, but not enough, probably, it would seem, to actually add weight to a rate cut or indeed any further extraordinary measures. The same can be said for the inflation rate here in the United Kingdom, even with the broader remit that was recently given to the Bank of England by Chancellor George Osborne in the budget statement last month. Another key piece of economic data out today, the ZEW Investor Confidence Survey in Germany, a benchmark reading of sentiment from investors in Europe's biggest economy. That tumbled about 12.2 points to 36.3, well shy of analyst expectations and well shy of the February reading. Now, in historic terms, and by historic I mean over the last 24 months, it's the third highest reading, but nonetheless that sharp decline represents concern that investors in Germany have about the ongoing Eurozone debt situation and specifically the stumbling around the rescue of Cyprus that we referenced just a few seconds ago. Again, though, to reiterate, we're looking at the third consecutive day of declines for European stock markets. It's down about 40 points in the FTSE 100. In context, that's not a bad thing, and you can imagine miners leading the decline when you see such a tumble in commodity prices. But it will be interesting to see how this manifests itself through the rest of the week and whether gold is ready for some sort of a comeback. We'll keep an eye on that, and of course, other stories on the economy page, so do check it out, and we'll see you tomorrow.